How to write bank loan proposal. Why you should know this? Understand, the core business of any bank is lending. If they want to make revenue, if they want to make profit, they have to lend. So lending is the core activity, and lending decision is taken based on the loan proposal submitted to the sanctioning authority. So when you submit a loan proposal to sanctioning authority, you should capture all essential information about the borrower so that sanctioning authority will be able to take very calculated decision. They can conclude whether they should sanction or they should reject. So that is the importance of loan proposal. In some banks it will be called as appraisal memorandum or appraisal note, something like that. Okay. So this loan proposal in general will have two parts. Part 1 will be executive summary, which will give bird's eye view of the entire proposal, because the proposal would otherwise run for 40 to 50 pages. So this executive summary for some 1 or 2 pages will give an overall view, or say bird's eye view, as to who is the customer, what is the credit facility they are asking for, what is the core activity of the customer, how their financials are, at what pricing they are asking for this credit facilities, and what are the justifications. Okay, this 1 or 2 page note executive summary, we are not going to go deeper into that because our focus is improving our ability to write the bank loan proposal. So that is a detailed proposal. So each and every aspect of the proposal we should appreciate why they are presented in that report, why sanctioning authority is looking for that particular information to take a decision. Okay, so the second part, which is the key part, it is the body of the proposal, or say main proposal. It will have details like borrower profile. Okay, so in that you will give name of the borrower, his address, what is the activity, okay, when they have incorporated, like that, many things. Then in brief background you will talk about what business they are into, how they are performing, who are their promoters, what is the shareholding pattern and all. Okay, so in these 2 points you will create a picture about the borrower. And it is not necessary that all banks should follow this same format. Some banks will start with the borrower profile, some banks will start with what is the proposal. Okay, so it all depends, but let's understand that our focus is understanding each and every part of it, not going by a particular format of a particular bank. Okay, then the proposal have to be mentioned. I mean, what is it you are asking for through that loan proposal? Are you asking for cash credit? Are you asking for LC, BG, term loan, or any other facility? Or are you asking only for concession in pricing? All those will come under proposal. Then you will have a table called credit limits, where you will be capturing what is the existing credit facilities availed by the borrower with your bank as well as with other bank, and what is the proposed one. Okay, so what is the overall enhancement, so that the sanctioning authority also will get a complete understanding of his borrowing position. Then banking arrangement, whether he is banking only with your bank, sole banking, or whether he had gone for multiple banking, consortium and all. So all those will get captured here. Then industry or sector of the borrower. If borrower is from textile, then you have to bring out the scenario of textile industry. Is it doing well, or is it performing poor because of various factors? What is the present scenario and how future is expected to be? All those have to be brought out here. It can be taken from various newspapers, various research reports. Rating agencies come out with various reports on the industry or sector. So all those have to be pursued, and those things should be brought up here so that sanctioning authority will be able to connect the borrower with his industry and take a calculated decision. Then we'll talk about performance and financial indicators of the borrower, how his profitability, then financial position are. All this will be expressed in the form of ratios, and sanctioning authority will be able to take a decision, and comments have to be offered wherever things are adverse, not at the satisfactory level. then these two statements, basically fund flow statement and cash flow statement, will be viewed very critically by the sanctioning authority, because fund flow statement will capture, say, financial discipline of the borrower, and cash flow statement will enable the sanctioning authority to understand that from where they are generating cash for their business, where they are utilizing it. Then synopsis of balance sheet is presented basically to enable the sanctioning authorities also to have a look at the balance sheet, because generally balance sheet analysis will stop at credit officer level, but sanctioning authority, if they want to have a look at the balance sheet, yes, they can go through that through the synopsis. And if any of the items in balance sheet is showing adverse movement that got to be explained, we'll be discussing each and everything in detail in later stages. Then a borrower is not seen standalone, because if a borrower is a part of a group, then consolidated position of the group should also be discussed, because it is possible that borrower may be doing well but the group is not doing well, and that could eventually pull that borrower also. So bank should take a calculated decision. Then to understand the real worthiness or strength of the borrower or weakness of the borrower, inter-firm comparison have to be made. So those data have to be brought out in the proposal, and when the results are very adverse, I mean when the borrower is compared with the other firms and if borrower is in very adverse situation, then you may have to justify why sanctioning authority should consider this borrower. Otherwise it's possible that on this ground also sanctioning authority will say no to the proposal. Then credit rating have to be incorporated. Credit rating can be divided into internal rating and external rating. Internal rating is what your bank does based on its own internal system or internal model, and external rating is something which are taken from the outside credit rating agencies like CRISIL, Fitch, ICRA, CARE and all. Then conduct of account also will be discussed, how this account was performing, especially in case of existing accounts, how it was performing in the past 1 year, whether there were any adverse transaction or say, I mean adverse reactions like irregularities, overdue, or whether the account had become NPA for some days. So all those will get captured here, and that would give a clear say pulse of the customer regarding the credibility. Review of accounts, it means they may be having CC, OD, term loan and all, so each and every account have to be reviewed, and say adverse feature in each and every account will differ. For example, if you take cash credit, overdue because of drawing power issue, okay, or overdue because of non-submission of stock statement, or we can say overdue or it had become NPA because of say not paying interest for 90 days or not routing the transactions through the account. So all these things are possible. So CC will be reviewed in a different way. Term loans and LCs and BGs will be reviewed in different ways. So all review of accounts will be captured. Security coverage. So what is the security coverage available to the bank? I mean again that will be divided into primary and collateral. Okay, so what is the extent of coverage? To what extent bank is safe? They'll be interested in knowing. Then comes warning signals. Warning signals about a particular borrower can emanate from various sources. It can be bank's own internal audit report, or it can be say risk audit report, or it can also be from RBI audit, Reserve Bank of India audit, or it can be from the statutory audit of the borrower itself, or the continuous overdues in the accounts. All these are warning signals, and sanctioning authority will be interested in knowing. Then sanctioning authority will also be interested in knowing whether this borrower is a compliant borrower. I mean whether he is complying with the terms and conditions or promises whatever he made. So that got to be mentioned. Then whether they have any statutory dues, because if there is going to be a continuous pending in clearing statutory obligations, then that could jeopardize the operations of the borrower, and it could eventually affect the banker as well. So sanctioning authorities will be interested in knowing this. Then comes contingent liabilities. Contingent liabilities are those liabilities which may arise in future on happening of certain event. So as of now they are not accounted in balance sheet, but it is only disclosed. Okay, so sanctioning authorities will be interested in knowing the severeness of contingent liability, so that got to be presented. Then what are the risk, these I mean what are the different types of risk your borrower is exposed to, and what are the mitigating factors available, that got to be explained here. So it's basically like a SWOT analysis. Then value of connection have to be mentioned. This is basically a justification for pricing. If you're asking for a finer pricing than the card rate, okay, then you have to explain, or you have to showcase the value of connection, how much interest and other charges were recovered from the customer as per the last balance sheet, then what are the other products sold to the customer through cross-selling, and how other bankers are offering competitive pricing. All those will be mentioned here. Then you have to tabulate your proposed pricing. So based on review of all the above items, sanctioning authority will be able to take a decision on finer pricing. Then every bank will have a loan policy, and it will list out various parameters or covenants, and whether they are complied with, or if there are any deviation that got to be explained and approval have to be taken. Then you have to say whether the borrower is under defaulter list of Reserve Bank of India, or say Companies Act directors defaulters list, or any other defaulters list maintained by appropriate authorities. Then eventually you have to come and give the justification for the proposal. If it is for CC, then you have to explain why they need cash credit. If it is for LC, BG, EPC, whatever, you have to explain why they need these facilities. Then that explanation should also be supported by the assessment table. That is how you have arrived at this limit. Okay, so all these will be discussed in a bank loan proposal, and in this session it is only an overview. In the following sessions we'll explain each and every point what I have listed here.